a bloodbath on the markets, it seems. I mean, when you look at the top 40, Shoprite, the only stock that managed to escape the sell-off, closing flat at 135 Rand. But overall, Oliver, what's taking place in the market? Why has sentiment been so badly hit by that Chinese growth outlook?
Yeah, I think definitely Chinese growth outlook coming into work yesterday, you got a bit of a shock with that. Everyone's been talking about a hard landing for China, and I think them coming through and starting to talk about it at the moment has caused a little bit of concern for the market. But I think the key today is a number of factors for the sell-off. Obviously very euro-driven, the news at the moment. The biggest thing being the ECB balance sheet being expanded to $3 trillion is a massive thing. The overnight lending and the money that's put on deposit with the ECB yesterday, we saw was actually up at about 520 billion. So, you know, those aren't good numbers. You know, it's showing you though that even with the LTR and there's so much excess cash in the system at the moment, and guys are very, very nervous.
Still nervous about putting their money in the equity market right now, and of course that has implications for our markets here in South Africa. What does that mean in terms of your investment decision? Because of course, some are saying still time to be stock picking right now, still time to be positioning your portfolio for growth when it does come, or you have the view that it's time to start being more defensive?
Yeah, most definitely. You know, I definitely think that it's at the moment you've got to be very, very selective if you have to be in the market. You know, if you don't have to be in the market, I think, you know, the best time now is just to sit on cash, see where this correction takes us from here.
But sitting on cash means that you're earning a negative return. So surely this presents a buying opportunity, as some would say.
Yeah, it's just 2%. And I mean, looking from where we've come, I mean, the DAX is up over 15% in a month's time. You know, I think there's got a lot more to come with this market. And I think, you know, there's some real concerns to the global economy. And I think that that's going to come through in the next couple of weeks, possibly this year.
When we're talking about sell-off on stocks, even the stocks that reported, the companies that reported really strong results today didn't escape the sell-off. Steinhoff was down by 1.9%, sitting at 26 Rand 34 cents, but yet really strong numbers coming through there. It really shows that the Conforama acquisition has been good for the company, but I suppose it was in line with expectations in terms of that 50% rise in headline earnings.
I think on any day like today, regardless, even as good as Steinhoff results are, stocks would come off. I had a look at them briefly. I mean, headline earnings per share up 48%, dividend they increased slightly. Revenues and profits all higher, so I think it was a fantastic set of results. I think you know, nothing's going to escape a day like today on the market.
But let's drill into those results from Steinhoff, because just looking at where their numbers come from in terms of earnings, 75% of their earnings come from Europe right now. We're talking about Europe, we're talking about a moderate recession and perhaps a worsening recession. So we're looking at a double dip recession taking place over there. 2/3 of their earnings also come from the retail space right now. Are you concerned about their exposure to Europe at all?
I think everyone's got to be concerned with their exposure to Europe at the moment.
But their earnings are still coming through, and they're still putting capex into it. So they're still seeing growth in the mass market space there. Yeah,
definitely, given what we've seen now with the growth that's gone forward. But I think forward-looking, you know, with a stock like Steinhoff might come under a bit of pressure if there is a real slowdown in Europe and, you know, people really start to feel the pinch over there.
Then does it make sense, the evolution that is taking place with Steinhoff right now as it moves to become, hoping to become a majority shareholder of JD Group, looking to become an investment holding company that is a majority stake in CAP, has majority stake in JD Group, and then of course lists ultimately its European business?
Yeah, most definitely. I mean, I think they're looking to diversify across the board, and I think possibly even because they're aware of the slowdown that you might see coming from the European operations.
Let's move on to the insurance sector. MMI's results coming out pretty muted there. When you're looking at core headline earnings increasing by around 4%, would you be buying MMI over and above any of the other insurers right now? Because the results out of the other insurers appear to be a lot stronger than what we saw from MMI.
Yeah, definitely. I mean, also once again, I had a very brief look at them. I think they're very expensive compared to their peers, and not at the moment. So I wouldn't be looking at MMI.
Any insurers that you'd be adding right now?
Yeah, I mean, it's a tough one. I mean, I don't like the sector as a whole. You know, I think their margins are going to come under pressure. So I'm not looking at the insurance sector at the moment. I personally think just on the market there's a further downside to come. I want to see where this correction takes us. Certainly the gold stocks are looking quite good at the moment.
So even though that gold price has dipped below $1,700, you see this as a buying opportunity because of the impact that it's had on the gold sector?
Yeah, definitely. I think we will see the rand weakens dramatically. You know, I'm not a rand bull, so I think we'll see dramatic weakness in the rand. I think the gold miners are showing a fair bit of value at the moment.
Did you have any preference in the gold sector? Because is this coming from a trader's perspective, or is this coming from a longer term perspective?
I think it always comes from a trader's perspective with myself. So I think there's value where we are in the likes of Anglo Gold, and I think they've been fairly oversold quite aggressively. So, you know, picking them up at these levels, I think there's fantastic value.
What about Merafe Resources? Because we saw the stock reacting positively to the results when they were first released this morning. Full year earnings almost halving though, and that hit by ferrochrome sales falling back, inflationary pressures coming to the fore. Not something that is unique to Merafe, but looking forward, it seems that the market really focusing on new production coming online in 2013.
Yeah, exactly. I think, and that's the exact reason why they come off. You know, going forward, their production. What are their concerns around the production going forward for next year? So definitely, I mean, I think there's much better stocks in that sector to be looking at than the likes of Merafe.
So you're not touching Merafe, even though we've got the outlook for full production coming online at Magareng mine, and of course the expansion of the Lion ferrochrome mine. No,
I wouldn't be touching Merafe at the moment. So I want to see where the sell-off takes us. I think it's going to show some value, possibly in a couple of weeks, maybe even a couple of days. Okay,
so we're talking technical levels right now. We saw where the JSE closed today, 33,387 points, I think it was. We failed to sustain momentum above 34,000. When we're talking technical levels like right now, what are you looking at?
Yeah, well, we trade the futures, obviously. I mean, 29,800 was quite key for us today. We thought that we'd find a lot of support for that around that area. That broke straight through, and we just saw it come off even more. I think, you know, Dow futures, we failed to close above that 13,000 quite a few times last week, so that was also quite a bearish indicator for us.
So US markets, you see this sustained downward momentum now, given the fact that this sell-off has persisted into the second day of trade this week, and you see the markets continuing to head southwards from here? Yeah,
definitely. I mean, we take a lot of indication from what's going off base metal prices and things like that. There's a lot that we look at when we try and compile a strategy, and those things have really started to turn in our view. So we think that there is further downside to the market. I think you know, everyone shouldn't be buying the dips, as they say. I think you should be careful. Just watch out where this goes from here.
Time to be defensive. That's the tone of your strategy right now. What does that mean for someone who's looking to pick up stocks and see this as a buying opportunity from a longer point of view? Where are the best opportunities when you're looking at the top 40? Yeah, apart from the gold sector, and Anglo Gold Ashanti.
Apart from the gold sector, I like SAB. I think SAB is a fantastic company. It's a very, very defensive play. You know, I think their expansion into Africa and around the world is absolutely fantastic. So I think if you can look to pick up some SABs, I'd expect, you know, with the rand weakness, they would also show quite a bit of value. But around about the $300 move or $300 mark, I think is a good level to be accumulating some stock there.
When we're talking about cyclicals, of course, the big discussion is, do you get exposure to the banking sector? If you're edging towards the stance that there are opportunities to get into the banks right now, would you be buying any of the banks? Of course, we have Standard Bank's results out later on in the week.
Yeah, no, I wouldn't be. I mean, the ABSA up at the 158. You know, you got Nedbank up at 160. I think they're very overvalued at those
Topish right now, given the projection for growth.
Yeah, most definitely, even given those, given good results going forward, I think.
Because they were really strong results coming through, especially from the likes of FNB when you look at ROE sitting at, what, 38% it was.
Yeah, no, definitely, without a doubt. But once again, I think that those that sector is going to come under a lot of pressure going forward. And I think it doesn't show value for me at the moment.
Okay, so where are we looking at 6 months down the line? Are we looking at, from the futures point of view, where are we looking at levels-wise?
Yeah, I mean, I think Euro 126.5 quite easily on the Euro, so I think there's going to be a major correction there. You probably give the Aussie probably about 28,000 there. So I think there's a good 10% on the downside that we can see.